Something really struck me on my recent trip to India. Everywhere I went, from tiny tea stalls to five-star hotels, nobody asked for cash. No coins, no notes, just phones, tap, scan, done. I remember standing at a street side coconut stall in Kolkata. He handed me a fresh coconut, pointed to a QR code dangling from the stall, and I realized India has quietly become the world's most digitally advanced payment society. But here's the story that few notice: India isn't stopping at digital payments, it's now building the digital rupee, a sovereign, programmable digital currency issued directly by the Reserve Bank of India. Not a cryptocurrency, not a payment app, a digital version of the rupee itself. And it could reshape how India and maybe the world handles money. To understand why the digital rupee matters, we need to go back a decade. It all started with a simple question: how do you give every citizen, rich or poor, urban or rural, access to banking and payments? The answer became the India Stack. It began with Aadhaar, a biometric ID system assigning every citizen a unique digital identity. Once that was in place, India launched Jan Dhan Yojana, giving millions their first zero balance bank accounts. And finally, UPI, the Unified Payments Interface, connected every bank, every citizen, and every app to a seamless digital payment network. This trio, Aadhaar, Jan Dhan, and Mobile, became the Jam Trinity, the foundation of India's fintech revolution. By 2024, India was processing over 12 billion UPI transactions per month, more than the US, UK, Germany, and France combined. It's remarkable. India built a financial system from the ground up, connecting hundreds of millions previously outside the formal economy. And this system now serves as the launchpad for the digital rupee. So, what is the digital rupee? At its core, it's a central bank digital currency. Think of the physical rupee in your wallet. The digital rupee is the same thing, issued directly by the RBI, but in digital form. Unlike UPI, which moves bank deposits through intermediaries, the digital rupee moves actual central bank money directly between wallets. No banks, no fees, no delays, just instant, secure transactions. The RBI launched two pilots: wholesale for banks and retail for citizens. Retail users could download wallet apps, load digital rupees, and pay merchants directly. And while it looks simple, it's a completely new financial rail, scalable, interoperable, and directly backed by the central bank. The digital rupee isn't just digital cash, it can be programmable. Government subsidies could be sent in tokens usable only for food, healthcare, or education. Businesses could settle international trade directly in digital rupees, bypassing SWIFT and reducing costs. Its biggest impact is inclusion, of course. The farmer in Bihar, the street vendor in Indore, and the gig worker in Bangalore, all now part of a digital economy that previously excluded them. It's democratization of money. But there are trade offs. With digital currency, every transaction can be traced. Who paid whom, when, and for what all exists as data. The RBI acknowledges this and plans some anonymity for small transactions while maintaining transparency for larger payments. It's a delicate balance, preserving privacy while preventing corruption, money laundering, and black money. This is where India differs from China. China's digital yuan is highly centralized. Every transaction is potentially monitored by the state. India, by contrast, emphasizes inclusion, democratic oversight, and privacy safeguards. Europe focuses on consumer protection, the US debates civil liberties, but India is trying to combine scale, efficiency, and trust, a uniquely democratic model of digital finance. Globally, CBDCs are a race. China leads with aggressive ECNY pilots, aiming for control and international influence. The US hesitates, wary of privacy implications and dollar dominance. The EU is methodical, focused on stability and bank integration. India's advantage, its digital rupee, is built on a functioning digital foundation trusted by hundreds of millions. Other countries are starting from scratch, debating privacy, regulations, and infrastructure. In a way, India is quietly exporting a model digital public infrastructure that's scalable, inclusive, and replicable for developing nations. Now, if you look at the implications, they're massive. Domestic finance, banks, and fintechs integrate seamlessly. Businesses settle instantly. Citizens transact with no friction. Global trade, cross border payments can bypass dollar intermediaries. Pilots with Singapore and UAE already show promise. Geopolitical influence, India could become the financial hub for emerging markets, offering an alternative to Western dominated systems. But it's not without risks. Too much surveillance could erode trust. Rapid adoption may strain infrastructure. And geopolitical rivals, China, US, EU, will watch India's moves closely, interpreting each step as a signal of digital economic power. Yet, if India succeeds, the digital rupee could redefine what it means to be a financial superpower in the 21st century. So, what's the takeaway? India has quietly built the world's most advanced digital public financial infrastructure, from Aadhaar to UPI and now the digital rupee. The country is showing how a developing nation can leapfrog traditional banking and compete globally. The digital rupee isn't just a currency, it's a statement that India can innovate at scale, protect inclusion, and compete in a world dominated by the dollar, the euro, and the yuan. And as I walked through these Indian streets, watching QR codes everywhere, it hit me. This isn't the future of money, it's already here. India isn't just adopting digital finance, it's shaping the rules of global money quietly at massive scale and with the world watching closely.